The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Hi folks, Basil Chapman sitting for Larry Pesavento. Larry's still away, and it's my pleasure to be here. I'm back. I did my show, the Tiger Technicians Hour, 11 o'clock till noon Eastern Time. Then, of course, Larry normally comes on, but Larry's away, so I'm going to be doing his show today. And a lot of things are going on. I'm just going to start off with this because, you know, it's really important that you sign up nice and early. If you go to the front page of TFNN, you will see that there's a huge competition right there on the front page, a virtual trading competition. TFN is the host, and it's going to be $10,000 being given away in cash prizes. Free to enter. That's great. Free to enter, and people have to sign up by Thursday, September the 5th at noon. That's a week from this Thursday. The trading competition will begin the following week, but most importantly, it will start on Monday, September the 9th at 9 a.m. and will end on Friday, September the 13th at 5 p.m. Eastern Time. And all the trading for the competition will take place on the Nadex exchange. And Nadex, of course, is one of our sponsors, and you've heard Daryl Martin talking about how he uses and developed a system on the Nadex platform. This is just going to be a fantastic way to just understand how you can not only be part of a competition, but it's free $25,000 that you get. This is trading play money. We call it play money, but in fact it's $25,000 to be able to take the trades, and it's essentially an account that is exactly the same as a real account, except, of course, that it is on a platform that is not activated in real. It's activated in real time, but it is not your own personal trading account, but it is your we call it not a play account, but it is a demo. Let's call it a demo account. Does exactly the same thing. Everything's the same, except you're not trading for real. Of course, you could, but in this particular instance, you wouldn't. And it's very exciting because it's a lot of money being given away, beneficial to everyone, and to my mind, it's just another way of learning how to use the market to your best advantage. And what better way than to have a competition? And what's beautiful about Nadex, you'll learn, is that you can put in a trade and it holds that trade all the way into that expiration of the time lapse. And all you can lose is that amount that you specify exactly that you're prepared to give up if you were wrong. But in between, you can take profits, or you can take off a smaller loss and holding out to the close if you think it's going to go against you. Hey, very exciting. And of course, listen to Daryl's program because he uses it concisely, developed a fabulous program. Now, let's go to the markets. The E-minis are at 1664.50, up 3. I had a caller just a short while ago in my show, Lou from New Hampshire, wanted to know what about the E-minis, and I said there could still be another rally in the E-minis, but as we were speaking, and the E-minis were up at, I believe, 1666 at the time, up at about plus 5.5. I said this would be a perfect time to do it. You can have a 3-point stop, very small stop, 3 points, $150. I think that's pretty reasonable. Now, what's most important about that is that all it needs, the E-minis need to do, in fact, at this particular point, if they not only take out 1667.50, that would be a positive. You don't even have to go that far as to make it a 3-point stop up in the 1668.9 area. Even that would be enough. Why? Because if there's strength that shows there could be a modest gain to the upside. But everything about it, from the 120-minute chart to the 15-minute chart, which is what I was using, if I got it here, yes, it's the wrong one, E-minis, ESU, there it is, to the double top, says that there should be a pullback below the 9-period exponential moving average. All the technicals are saying at this particular point that there's still some internal strength at 81% in the stochastic on the 15-minute chart on the MACD. But this is the opportunity that you wanted, because if there is a slide below 1663, then immediately 1661 becomes a focus, and even the 1659 level, the 1659 to 1658.25, the low of the day, becomes a target. So good risk reward. And the reason why I said just on a short term, and the reason being that I wanted him to do it as a trade into tomorrow morning, if it's going to work into this afternoon by closing week in the market, is because we could have a pullback in the morning, and then later in the day there could be another buy. And I suspect that there will be another attempt between now and Wednesday to try to make nominal new highs in the S&P and the Dow. But everything about what I'm looking at says that this is a counter trend move from the bigger picture, which is peak D in the E-minis on the 5th of August at 1705. Pulling back to 1631. Hey, that's 74 points. That is a huge move to the downside, but nothing if you're looking at the weekly chart in comparison to the gains that we've made. I believe this is a digestive period unfolding right now. So Basil Chapman, Tiger Technicians Hour host and author of the opening call. That's my daily newsletter where I'll go through just a huge amount in terms of looking at the markets, trying to use the Chapman Wave methodology. Let me just show you here. This is the quintile, the 5 different sectors that I look at for my overview and market today. And in this particular instance, you see the 120-minute chart has gone to a leg B, but it's a very small, it's kind of a pathetic rally. It's used up time more than price from the 14,880 low, going all the way to the high today, which is around about 15,049. I see the 15,050s to the 50 will be the first resistance, 15,070s, and the 15,090s. Those are the levels to watch today. So we've gotten to the first one. Now the pullback says that the low of the open, which is around about 15,014, that's going to be the key area. A break below that says, yeah, be careful. Now, the volatility index is still low. 13.98 was the most recent low. 1390 was the low this morning. So that continues leg D down to 1390. Let me type that in. 13.90. If this volatility index over the period of the next 3 hours starts to move step by step, I'm not sure it can, but if it does, and by this afternoon, it is taking out the high of 14.48. Wow, that's a long way to go. 14.48, that would say, uh-oh, short-term, a near-term pullback in the market, and then we're going to see how it holds. My suspicion is going to take a lot of bad news and a lot of negativity to get the volatility index to break above 1656, the most recent PT high in the Chapman Wave in the 120-minute chart. And the moment this volatility index goes into the high 15s, this market starts to pull back. The moment it goes into the 1660s or higher, the sell signal to sell mode in the S&P will probably be triggered, and will start to push things down in the daily chart. Daily chart is already in sell mode. It's the weekly chart that I'm looking at in all these different indices. Let me just do that for a moment here. Let me just do this because you'll see that the weekly chart, let me just do this. I'll go to the S&P. I think with Larry's show, most of the people here are S&Pers rather than Dowers. So SPX.X, there it is. Now what we've got is, there it is for that index, but that's the wrong one. For that window, I mean. There we go. SPX.X. Okay. Weekly chart says lousy action over the last few weeks. Since the 1709.67, the MACD's turned down, stochastics at 75%. There's just a really good chance that unless I'd even have to say 1675, yeah, somewhere around, if the market closes above 1675 on Friday, it actually has to close quite a bit higher than that. I would have to say that the weekly chart is recycled, probably going to recycle to the upside. I just don't think it's going to do that. I think we're in for a period of consolidation, maybe using time more than price. We'll see. So here are the parameters. The S&P, a break into the 1675, immediately targets that high of 1679.61, the high of the 15th, where the market gapped down. A break on the downside below yesterday, the Friday's low of 16.54 immediately targets an H pattern that says, watch out, the 16.39s becomes a magnet for the downside over the coming 2 weeks. Okay, now let's go to, I want you to go to gold. So the GCZ 113, that's the gold contract itself. I've got it in the Chapman wave. Now, I actually sung the song, didn't mean to, it just suddenly came out. The Chapman wave song, buy at the low and sell at the high, during the previous hour. I won't put you to that through that again. But look, the low bar of 1182.62 made on the 28th of June. I must just put that in because I talk about it enough. 6/28/13. 6. You'll notice that I have to type most of these back in 3 times or 2 times because there's a little problem here. Okay, there we are. That low went to a peak A, B, C, D. That's the requisite in the Chapman wave to get you to a D. Then it went to 1349.20 and it pulled back to a trough D. Four peaks to the upside, 4 troughs, lower lows, lower V-shaped bottoms, each one lower, on the downside to 1271.80, and now it's gone A, B, C. I suspect it's going to go to a D. Can it go to 1468? That's the level of the 200-period exponential moving average in the daily chart. If you're looking at Tiger TV, that's that line right there. That line right there, that pinky goldy chart. Yeah, it could do that, but a number of things have to happen. The stochastics at 90%, that's good. And the MACD's expanding, but it's the weekly chart that needs to show enough strength to get it to, if we can get to this 1430 area, wow, that's much higher. But if we can get to the 1430s, there's a chance that we could see a very large arch formation. The higher that this rally goes, the greater the chance for an H to an M pattern. The shorter the gold rally from here in time and price, the greater the chance that it'll just be an H and that we will retest the 1190s to 1182 area sometime in September. I'm watching this real closely. So that's the gold contract. Now let's look at this. I'm going to go to the continuous contract of silver. Silver's in leg E. I'm going to go to the Z, the December contract. That is also in E in the Chapman wave. So it's saying on a shorter term basis, I had a question from subscribers saying, what about silver? Another one saying, is it too late to get into silver? My suspicion is yes, it's too late for risk reward, but a pullback in silver in the December contract with this doji coming up right now, with gold still in leg C, I suspect that 24.17 up 0.38, there could be a pullback, and that pullback hinges on holding 23. A break below 23, you have to, on silver, it has to hold 22.50s. A break below that, and it's very poor. But right now, everything points to silver moving a little bit higher. Now, I think we've used up a tremendous amount of torque, acceleration pressure to the upside. Now you need to see momentum in the gold and silver contract to continue for another few weeks to the upside, and I'll talk about that a little later. Right now, the Dow's up 23, S&P's up 3.5. I'll be right back. Take your calls at 877-927-6648. Tesla at 171 up 9. Ooh.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. Let's see, we've got the Dow up 29, S&P's up 4. Kind of a sideways trading range today. Slightly higher highs thus far. Now, what we're looking at, platinum. Platinum has had a fabulous move. Platinum has gone from the low of, let me just get this right here, from 1296 area to 1543 with 1.564 as the 200 period exponential moving average resistance. Leg B in the weekly chart. MACD's at 89%, and the MACD's good. Stochastics at 89%, but the monthly chart has a lot of work to do. Now look at this. You remember I spoke about in the chapter where we look for D's, E's, and F's? Well, that's exactly what you got here. Okay, that should have been an inverted V, right? The little hat. That's to show another top. Right there. You went to a peak F top, way up, and now this is a continuous contract, so the price will be smooth. But back in March of 2008 was a high, comes all the way down to where? The 200 period moving average, right there on October of 2008. Then it starts a peak ABCD, pulls back, goes ABCD again, pulls back. Look, the last D back in 2004 had a very sharp pullback. Still went to another ABCD and then an E, and even an F. In this case, it goes to 2 more Ds, so you got 3 Ds out of 4 buy modes. Very interesting. Of course, 1D did work, but it went even higher to an E and F. Now, this is a leg A. I call it a gray A because it's way underneath the previous high of 1752. That's the continuous back in March of 2013. That's March the 28th of this year. Now, this is going to be very interesting. Why? Because it's at a high-level consolidation after a potential H pattern, which has taken forever, just forever, and hasn't gone even close to the previous low. So in the meantime, what we're looking at is that this is actually quite positive on the monthly chart, although the technicals are still quite weak. The weekly chart is quite strong, suggesting that the 1.56 area is going to be hit. But the daily says, be a little careful here. I'm just a little bit tired. I've been pushing a stair-step fashion. I've gone from one level to the next, had a consolidation up at that level. Then I've just constantly gone to higher highs, sideways move, higher highs, sideways move. And now the 1.524 to the 1.511 area is an area that's probably going to be tested over the next week, maybe even a little bit lower before I can go high, because this line that I refuse to even get close to, since the breakdown of, the real breakdown was on the 19th of February. No, it wasn't. It was even before that. It was on the 15th of February of this year. And ever since then, it hasn't been able to hold the 9-period moving average as support for more than 1 day. And then it broke down. And now we're looking at the 200-period moving average being negotiated and touched and broken above for the first time. And the 9 EMA is just crossed above the 200-period exponential moving average. So that says to me, platinum is acting pretty well. And that has to do, I think it has to do, let's see what Ford is doing, the automobile companies. Just a bounce, just like the Dow, just a counter-trend bounce. Let's see what GM's doing. And you know that the Chev, which model was it? Not the Malibu, was it the Malibu? One of the Chevs got one of the best ratings, in ratings itself. It was superior to almost any other car. Highest ratings. In fact, it was a shock. Now, I'm always intrigued at what's happening in Consumer Reports, because they didn't have American cars on the list, of course, for good reason, for decades. And now they're starting to have American cars. The quality is still not quite the same, but this one says the quality is actually pretty good, but it is a new model. So because it's a new model, they can't rate it on quality. They rate it on all the other things. And that's pretty darn impressive. You know, I've been talking about this for 20 years, since 1983? 1986, I'm sorry. I've been talking about American cars will one day be back, and the Cadillac will be the premier car company once again. Well, we'll see. It's happening slowly. So now let's go to the important stocks in the NASDAQ. Google. Google made a round number, open and close, at 923. It then went to a round number high of 928. The 928 happened to be peak D in the Dow, a peak F in the weekly chart, and a potential peak D in the monthly. That says, hey, there could be a high-level consolidation, but at any point, if Google takes out 847, it's at 871 right now, up $1.34. If it takes that out, doesn't even have to close under it. If it takes it out, be careful to the downside. And we'll go through some of the others on the big caps on the NASDAQ. I'll be right back. Basil Chapman, 877-927-6448, sitting in for Larry Pesavento. Love to take your calls.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technician. Oh, whoops. Tiger Technician was the last hour. This is Larry Pesavento's show, Trade What You See. Sorry about that, Larry. And love to take your calls at 877-927-6648. Up. We've got Shivan on the line from Boston. Hi, Shivan. How are you?
How are you, Basil?
I'm well. I haven't heard from you for a while. You been well?
Yes, I'm well. Very well. Thank you. Busy. Back to work.
Busy is good.
Yep. I would like to have your opinion on NYX. And there is a corporate action on this stock, and I'm just wondering, what should I do with it? I mean...
So you own it, and you own it from lower down?
Yes.
Okay, so there are a couple of things. So what's happening with what's the story that's going on? I know there's always a story with NYX, but what's the story this time?
No, this one they're merging with CBOE. I mean ICE.
Oh, of course, I've got it. Yep. I remember now.
I'm just wondering, what should I do with it?
So they're merging, and then the stock's going to be owned by NYX, or who's going to own the stock?
ICE.
ICE, okay. So Euronet will be giving up ownership in a way, right?
Yes.
So let me look at this ICE stock now. Because sometimes it's really not a bad thing to go from a good company. I'm trying to think of Fisher Scientific. Whatever they did, whenever they did it, there's always benefit to the company. It's just a fantastic company. So sometimes when you go from the self-ownership to the ownership as part of another company, it's a real negative thing. And other times it's a very big positive. I'm trying to think of, let's see what ESRX is doing right now, because it was a company that was ESRX. Okay, it still went higher. Yeah, so you know what? This is one of those situations where, let me just do this. I'm going to do this just real quickly here. I'm going to do this as if there wasn't anything going on. And what I would say to you, in the weekly chart, it's walking the 9-period moving average. It's not closed above it once since it broke above it. Oh, man. Since that huge move back in December of 2012, it went from 23.40 to 33.38. Now it's trading at 42.66, and it's still hugging that line, walking that line. Okay, and ICE itself, now, you know, we've just had this thing going on with in the biotechs. I'm going to talk about that in a moment. And you had Amgen soaring to the upside and pushing up some of the biotechs. But in fact, when companies start, when you get this plethora of takeovers within the industry, it invariably is occurring as they are making all-time highs, and invariably the company that does the takeover, like Amgen, I would not be surprised one bit if we see Amgen in 6 months' time 30 to 40 or even 50% lower than where it is right now. That's just kind of what happens. You know, there's the expenses involved and all. This one, they have very similar chart patterns. If I was just looking at the chart pattern, I would have said there's a bit A, B, C again. So I would have said there's a good chance that ICE is within, it's at 185, it's within 10%, I would even say within 7% of making a pretty significant high. That's the way I would look at it, but I don't have any signals right now. That's my eye is saying that based on the data in the weekly. So if I go back to the NYX, not dissimilar, same kind of patterns. Oh, okay, I think I know exactly what I would be doing. Don't do it right away. You're going to have a couple of days to think about it. But my thinking right here is that you've had a very good gain in NYX, and I'm suggesting that you take some part of it off, maybe a third. You make the decision, a half or a third, and I would put a stop on the rest. NYX is at 42.65. It probably get, so I don't know what the price is that they've offered. It must be somewhere close to around here. I don't know. Who knows? There could still be another offer. That's the reason why you want to try to stay in. But I would not want to give up the gains. So I'm going to suggest that one half of it or one third should be taken off now, and you just stay with the other. And at any point, if it starts to show weakness, that weakness will show if it's at 42.65. If it starts to close below 41, if it closes below 41 on a weekly basis, I would start to tighten up my stop on the rest. And I just treat it as another stock. My eye says that at some point within 3 to 6 months, both of these are going to be quite a bit lower. But at this particular point, I wouldn't over-anticipate. I'd just say, good gain, about to be taken over. Let's take advantage of that. Let's take something off, and then we'll manage the rest with a stop in place. But that's when is the actual takeover? In a few weeks? Oops, I think we might have lost Shivan. Well, I'm sure he's listening. So that's my recommendation. Think about it. You don't have to do it today, but start thinking about what would I want to take off, what would I want to keep, and then the part that you keep, I would have a fairly tight stop. Even on a half of the position that you keep, I would have a fairly tight stop, and then let it do what it's going to do. After all, if you're keeping some, not all of it, but some, and it breaks down, that's fine. You've taken your profits. But if it gaps up to the 46s, you got another 10%. That's 10% on a smaller position, but it's still a gain. That's the way I would look at it. And you've had it for a while, I would try to keep a core position and see how long you can keep it. Let's go to Mark in Fort Collins. Hi, Mark. How are you?
Good, Basil. How are you?
Very well, thank you.
Good. So I just have a couple questions. So I'm looking at IBB.
Yes. Now, let me just tell the folks what it is. IBB is the iShares of the Nasdaq Biotechnology ETF. Yes.
And it is quite well into the bar of 8/6 of August 6th.
Yes, that's the bar where it made the top, confirmed the top, and then plummeted.
Right. So because it's into the bar pretty significantly here, my guess is that we might be making another test of that 200 level. And
right.
So it had a couple of closes above the 9 EMA the last few days here. So, I never took, I know that's one of the positions I never took that you recommended relating to the IBB.
Right.
But I'm now looking at do you think it's now got a pretty good chance of testing the highs and maybe being another
I don't think it's recycled to the upside. Part of this is the Amgen story. So let's just go through this. Trading right now at 198.22, up 5.17. Amgen, AMGN, one of the top 10 stocks, in fact, one of the top 3 or 4 stocks in the index itself, is making, it's either going to be a leg B or a leg F in the daily. And in the weekly chart, it could be a brand new C, or it could be, an E/C. Now, when I look at the monthly chart, I'm saying, oh, wait a minute. It's really unusual to get G's in a monthly chart. It happens, but it's like the letter of last resort. Invariably, it's recycled. My look at it right now says that, is this a brand new leg B? Wow, that would be amazing. But I'm going to treat it. Let me just double check here. That I know I went through this many times. 85.28, 85. Parallel highs. So I'm going to use that for now. As parallel highs, I think I can use that. Give me 1 second. ABC. I'm going to, just for argument's sake, call this a G/C in the monthly chart, but that's not even the issue. The issue is that the MACD is very powerful. Stochastic's not so powerful. It's at 76%, but it says the price is moving higher. The 9-period moving average is way below. It's breaking above that as a springboard. Now let's go back to the. I tell you what, I'm going to make it real easy. As far as I'm concerned, if we get stopped out of our short position, it'll be for a gain. It was a fabulous gain. Now it's just a gain. In fact, it was a fabulous, fantastic gain. But in the meantime, I don't really mind, because it's setting up for me a sense, and I thought it could happen this morning. I thought about immediately taking profits in that position, and then I thought, you know what, let it play out. You got to let it play out, because you want to see what the close is. It's most important to see if Amgen, I want you to look for round numbers in Amgen. There haven't been any. It's 110.77 was the open, 116.25 is the high. It's trading right now at 114.88. Give me 1 second here. I'm going to do this. If I can just find it. I had it right. There we go. I've got it right in front of me. So we've got Gilead, G-I-L-D, G-I-L-D, Gilead Pharmaceuticals, is that what it's called? Yep, Gilead. And we've got Gilead Sciences in leg F in the monthly, F in the weekly, peak F in the weekly, and it had made a peak E in the daily. This so far I have to treat as a counter trend rally, but there's that pattern that I always look at, and it's the one that I call the falling axe. That's the declining, expanding cone, and if you break out above it, it could be very positive. So here we go. So Gilead had made a peak F. I thought it was a hat-trick top, possible hat-trick top in the monthly, weekly, daily, but the month has to finish, and we haven't yet got a confirmed peak. So now let me do that. So far, the technicals in the weekly are really quite poor in Gilead, GILD. The monthly chart is good, and the daily is just a counter-trend bounce. And that's what I've been looking at. Regeneron, R-E-G-N, Regeneron Pharmaceuticals, peak D in the daily, monthly, a double top peak C1, C2 in the weekly, And just a counter trend bounce in the daily. This thing, I think, is done for now. So unless somebody wants to take it over, sell Gene. I don't know if I did sell Gene or no. I did it earlier in the day for myself. Leg B up in the daily. Peak D in the weekly. A G/C in the monthly. So that says that's still acting quite well. I guess my voice is not used to 2 hours here. So Celgene's acting well so far, but still I'm calling it a counter trend rally. Alexion, ALXN, this is number 5, I think. Yep, same thing, made a peak, and I think that peak is a peak of significance. Well, I can't really change yet what I was thinking. When you get one stock that has such an impact, it's a leading stock. It's like Apple in the Qs. Apple is leading the Qs. And now these others have helped it a little bit, the Qs, but not enough to make a new recovery high. I'm going to stay with what I've got. If we get stopped out, I'm going to come right back in. I don't know yet what the price will be, but I have to do that. I have to say that the weight of evidence is thus far Vertex. Let me have a look at Vertex. I think it's VRTX or is it VTX? Yeah, Vertex. Is that correct? Vertex Pharmaceuticals, same peak D, peak E. I think it's making a hat-trick top here. And Perrigo, PRGO, I believe is the symbol. Yeah, peak G in the daily, peak F in the weekly, and E in the monthly. Mark, I have to stay with what I got. If I get taken out, I'm going to come right back in. It might not be today, but I'm going to come back in. I think that the IBB not going to fight the trend, but I'm looking for the first sign of weakness. And how that weakness comes in will tell me either we're staying in the position because we haven't got stopped out, or I'm going to be re-entering that position. So where would it break down? Obviously, if it gets to 200, there's a good chance that it's going to try to make a double top. How it impacts the weekly chart is going to be a big issue. I'm going to have to say, oh man, is that a G or is that a C on a new high above 201.47? I'm just going to do this hour by hour, day by day. I don't think I want to change my outlook at this particular point until it's confirmed that we're taken out, that there is a new recovery high, or it's testing the all-time high in the IBB. That's the position I'm going to be holding, and it's one that's still on my list, and there are some of the stocks within it that I might just decide to short instead.
Yeah.
So.
Yeah. I'm kind of looking at a 200 put for maybe October and just trying to figure out the timing.
Oh, if that's what you're doing, then what you need to say to yourself is 10 points to 15 points on the daily. It does make a little difference to the weekly, but looking out to October, it gives you a lot of room. Everything about what I'm looking at here says, by my eye, this by October should have been testing 172.52, the 200 period, the 9-period moving average in the monthly chart. Everything about it. Now, it's only got September and part of October. There's 6 weeks, so I'm not sure that I can say that it happened by October. But my eye says that would be the target for about 2 months to 3 months.
Okay.
So. It's worth having a little bit of patience because you're talking about a longer-term position. So either you can start a position now knowing that there's certain points you want to add to, but I have to say that if there's a pullback here at whatever the high is today and there's a pullback last 2 days, and then there's another break above it that goes to 199.46 if today's high is about where it is, I have to draw that expanding X formation, that cone formation, and that could give you a 1-to-1 to the upside, going to 205 to 207.
Okay.
Yeah, I'm going to stay with my position. I think that it's going to be coming down, and we'll just have to deal with it as it tries to test the highs. Hope that helps you, Mark.
Yeah, it does. Bye.
Thank you very much for calling.
Weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And and now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Everyone, Basil Chapman, Tiger Technicians Hour. Stock, that's what it is, stock. Dow's only up 26, S&P's up 4, just in this range. But I must tell you that Friday, that lost extra 35 or so points, that just 45 points, that suddenly pushed it to the high of the day. Normally, I would expect a give back of at least half that. And so far, the market's actually held up really well to this point. So I don't want to fight any trend here. Now, we're looking at Facebook questions. Adamant wanted to know about Facebook. FB is the symbol trading at 41.49, up 94 cents. This is leg D. It's so interesting. I was going to trade this. I just wasn't sure whether this is a C1, C2, which usually put a plus sign there. And the technicals failed. Everything failed. A lot of these stocks have done that. The technicals have been very weak. Yet the prices held well. I'm impressed when price holds. Price is the arbiter of trends, nothing else. You can talk about Fibonacci, you can talk about anything you want. But if the price holds, that's very important. And there was a big gap on that whole earnings news, a surprise back on the 25th of July. So I like this. It's leg D in the daily. Everything about this is a pattern that I recognize. I suspect that it's going to maybe try a little bit higher, but it's then going to trade in about a week or so. We will see it trading probably between 40 and 36, somewhere in that range, and that's going to be very key. But the weekly chart, I've got a C/F, not an F/C, but a C/F. That's very positive. Stochastic is 93%. MACD is good. If you're long it, don't do anything. It's only a leg B up in the monthly chart. I was saying to Adam, and this is one my wife and I actually discussed some time ago. This is the kind of stock that you look for grandkids, just to put away and see what happens. Just, you put it away. Because they do everything. This is a 21st century type stock. And it's in leg B up, but it won't officially be a leg B until it breaks above the 45 round number high of the opening of May of 2012, and the low was in the 20s, and the high was 45 round number high. The moment it starts to break above 45, not only does it start to become a little bit vulnerable, but it's saying great, because now the monthly is free to go to a C and a D over a period of time. So I would look, if you aren't in it, you got to have patience now. I would look for a pullback to start nibble at a position under 30, it's at 41.43, underneath 38.18, 38.50, but the real position would be great if you can get it in the 35s for a second position, somewhere around 35 to 33. That would be absolutely fantastic. Looking out, that is. Okay, now, quickly, corn, C. In the continuous contract, it's gone even higher than we were talking before. So that's CZ 113. I told you I like that. Gave me a signal the other day. It's only leg B up in the December contract. My continuous contract is in leg C. So I'm going with the continuous to say that I'm going to be a little conservative and call it C, but actually it's officially D in the December contract. Now, what's important is this. In corn, what you really want to see is there's this big channel. Now, that could become a falling axe or a flag pattern, because if corn is able to continue higher, and at some point in September, if it's able to close and break above 568, it's trading at 519.5 right now. If it breaks into the 568 area, that'll be incredible, because the candle of June of 2013 with a high of 603, that's the candle that it'll want to test. It's going to fail at any point. This is a weekly chart, but it'll fail at any point because the monthly is still not very pretty. But it'll fail if at any point it closes under 480. Closes, that is, on a weekly basis. Okay, so now I wanted to do that. I wanted to say platinum is acting very well. I can't remember where I was in platinum. I did the whole thing with platinum. Then I looked at Ford and General Motors. So now I want to also look at high-grade copper, HG. See, high-grade copper, to me, this is very important. That 9-period moving average that's been support. The 200 period, I spoke about copper, I did. That area in the 337 area in the continuous contract, that's going to be key. I think copper is acting very well, but it needs to digest some of these gains. Folks, I'm sitting for Larry Presidential. My name is Basil Chapman. My service is the the opening call, and my show is the Tiger Technicians Hour, 11 to 12, every day, Monday through Friday. Thanks for being here. Stay tuned. Daryl Martin.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.